guys, Dave and Dawn here. Just wanted to go over basically your home business benefits to having your own home business and the tax benefits that you're going to get out of that. Dawn being a CPA in the past, you know, she has the knowledge, and that's where we want to share some of her expertise with you to look at, you know, having your own home-based business. If maybe not a home-based business, if you want to start a traditional business, you know, more than willing, go ahead. You know, it's not for us anymore. We definitely wouldn't do that again. So, but I did want to talk about the benefits of tax, and I think it's a very powerful thing. You guys don't realize, or maybe you do, a lot of you out there that have been in a home-based business, you know, maybe you don't understand all the deductions that you can take. If you're going through H&R Block or something, they're not going to maybe show you some of these advantages in regards to maybe your rents and mortgages and some of the other things we'll talk about in this video. But the thing is, you have to remember is, right now, you know, if you don't have a business and you just have a traditional job, you're probably working from January to May of every year just to pay taxes. Now, we're not saying don't pay your fair share of taxes, but try to keep as much of that as possible and pay your fair share. You know, and if you have to pay $50 per year, that's great. You've paid your fair share. But the thing is, you got to remember, there's a different philosophy in regards to the rich and the middle class and the poor. And what happens is the rich has corporations, and through corporations, what they're able to do is defer some of those taxes. And what they do is they actually spend their money and, say, buy assets, or, you know, I don't want to say liabilities because you got to buy assets in order to have it as a write-off. But they're able to go off and buy assets, and then they're taxed on whatever's left over. The difference is with the poor and the middle class, what we do, the employee, well, you know, I mean, you could be fairly rich being an employee, but the difference is you're taxed first, and then whatever is left over, then you're able to go off and buy your assets or your liabilities from whatever's left over. So we just want to show you some of these things that you can maybe get some of this money up front and go off and buy these things, and it's just a different philosophy. But, you know, the main thing is, you know, you have to do it for yourself and try to save as much money, especially with the economy the way it is. Some of the things we want to talk about today is probably like your telephone expenses, your office, you know, furniture and equipment and things like that that you can actually write off. So I'll let Dawn explain a lot of that. She's better at it than I am. So.
All right. Well, you mentioned telephone first, and that's a good one. Your basic home line, because it has a lot of personal use involved, is not, the main service is not deductible. But if you have long distance calls for your business, those are deductible. And you can also create a second line for your business only, and therefore all the service and long distance and everything related to that second phone line would then be 100% deductible.
What about cell phones? I mean, we get a lot of people that they think they can write off their cell phones, and, you know, if that's a primary phone for that business, I guess you could, but...
Yeah, it's based on your business use percentage, what percent you do use it for business. Basically, it needs to be over 50%, basically before you can start taking deductions, but most of us that have a cell phone do use it more than that for their business. Essentially then, you know, say you use it 60% for business, then you can deduct essentially 60% of the expenses related to that cell phone. But you need to be careful on that. That is something that's very well scrutinized because there is a lot of personal use involved, which that could apply to some of your office equipment. I mean, a lot of that is deductible based on business use percentage, but again, it is fairly well scrutinized because it is a luxury or a personal use item as well.
So what else is that? So a secondary line is going to be around 100% write-off. But then what other things do we have as 100% write-off for business purposes by having your own home-based business?
Office supplies is a big one. You could have a variety of items that fall under that. Essentially, you know, supplies that are used for your business are 100% deductible. And travel is a good one too, which can include your business mileage back and forth to appointments, to meetings. You could have corporate events that you attend for your business, so therefore that mileage is deductible for business purposes. There's a standard mileage rate that you use for that.
And what is it, like 50, 55
It was
cents?
55 cents in 2009. I do have a listing of what it is for 2010, and we'll get that information out to you shortly. But yes, you can take that standard mileage rate times the business miles, and therefore that is a deduction. And as far as travel goes too, that includes like airline tickets and accommodations if you happen to go to a corporate event or go to another state perhaps to meet with a prospect.
So let's say you come down here to Florida, you want to meet with us, you know, maybe we meet in Disney World. You know, is
perfect spot.
That a write-off? Yeah, you know, the government lets you write that off. If, you know, we go down, we hang out on the beach, you know, some local bars down there on the beach, you know, we have dinner or lunch, you know, that's going to be a write-off to a percentage.
With documentation.
Yeah, you definitely, you got to keep your documentation, but remember that you don't want to give too much information away as well if you are ever in like a tax situation or an audit, you know. You know, keep your information handy. You do want good records, but don't, I don't want to say, don't share it, but don't give them anything that they don't ask for in the future.
Exactly.
Other things that are, you know, a percentage of write-offs. So we've got home business write-offs. And what we're planning on doing, guys, is we're probably going to have Dawn go through and get into some of these details a little more specific on each one of these things. So maybe we'll do another video, or Dawn will do a video by herself on like the office furniture, and maybe go through and itemize the different things there, or list the different things, excuse me, and give you some of that, because it's very difficult to do, because we're going to upload this into YouTube, and it's very difficult to get all the information to you within that 10-minute period. Okay, this is not meant to be a full-fledged, you know, what's your write-offs, and, you know, you can't come back and say, well, Dawn said to do this. Well, you know, you have to use common sense, but we're going to go through and just try to give you an overview of some of this.
That's available.
Yeah, and we don't want you to say that this is exactly like it is, but feel free at the end of this, you know, to contact us if you do have specific questions, and we'll try to go through and answer some of those as well, you know, as your comments or whatever you do when you subscribe, comment, and rate the videos. So, but then let's get into like 50% write-off. Well, I guess one other thing is, let's look at startup cost. As a startup cost for a company, let's just say you decide to get into a home-based business. I don't care if you call it Amway or whatever you decide you want to get into here. If you do get into that, you've got your initial cost to get into that business, and then that is 100% of a write-off, because that's a business.
Yes.
And then you're going to have income on that business, and then you're going to be able to write off your income against your expenses.
Right, or your expenses against your
income. Your expenses against your income. So I knew it was something like that. But anyway, yes, you know, and then all your supplies. So if you have things for like home office use, you're going to have your cable, you know, or your DSL line. You're going to be able to write off a percentage of that.
Yeah, the home office deduction's like a whole separate category, and there's some specific rules that apply to it. But generally, the office has to be used 100% for business. And then you can actually deduct things. I mean, mortgage, interest, and property taxes are deductible anyway, either on your Schedule A or against the business. So those really don't matter. But then there's utilities, there's your home insurance, depreciation on the home can fall in there. So there are a variety of expenses that you normally can't deduct at all, but because you have your office in your home, you can deduct those, and they're actually based on the square footage of the office compared to the square footage of your total home, and that's how that allocation is done.
So we have like a lawn service that cuts our lawn. Now, we can write that off as a percentage because we're doing business out of the home. So a percentage of that based on the home use and the cost and expenses. I mean, you got to watch how creative you get, but
probably on the lawn service outside, you actually have to have people coming to your home to meet with you. Otherwise, there's no reason to have your lawn look nice, just from the IRS's perspective. But if you have meetings in your home, then definitely that would.
Yeah. So if you're going out and buying party supplies or whatever, or
Yeah,
you know,
definitely. The
things
party
like that.
supplies are deductible.
You know,
Right.
it's going to be deductible. So, like I said, we don't have a lot of time that we want to go through more of these videos in the future to give you some more insight. But this is just kind of an overview that we wanted to introduce you to some of the benefits that you're going to get in regarding, you know, tax write-offs by having your own home-based business. Right now, like I say, you're paying probably about 50%.
Fairly close to
You
it.
know, depending on what your tax bracket is, but you're paying a lot of money to the government, and they're going to get a lot more of it here in the future with their spending the way it's going, especially with the audits that are going to be drastically increased in the future. So, don't have a lot of time right now, but we'll go into more details about these videos in the future, you know, and the different topics. So, thanks and have a great day. Make sure you comment and subscribe. So, we'll talk to you later, guys. Thanks.
Thanks. Bye.